Yeah. Hi. So, how was your experience with number crunching? Pranay and Shravan, you went over it last time, so we'll start with the rest. Uh, Hiral, Himatri, Srikant, whatever you have done, don't worry about how much you have done. Uh, just tell me.
Yeah.
Here we are not
So
to prop anyone.
yeah. I mean, for me, like I tried actually going over a company, trying to analyze and understand. Do you want to go through the sheet or just give inputs?
No, just tell me how is your experience. We'll go through the sheet in probably if we have time this session or next session.
Okay,
You
no
can just
problem.
tell me how was your experience. Did you apply the formulas that were there in the presentation, or how did you do it? What
Yeah.
challenges you faced?
Yeah, definitely. I mean, more than applying the formula, trying to understand the true sense of what this means, whether these numbers make any sense. Because applying formula is like Excel sheet; you can blindly put any numbers, or we can just create a auto calculator that can give some numbers. But I think I was trying to get to understand each what that means and stuff, especially what we discussed about the quality of earnings and what that truly means, like how the cash is going. So overall, I think it's been good learning, but I think we need to still spend time. I mean, I feel unless we spend time with multiple companies doing the same numbers, then it will start giving a lot of relatability. Otherwise, like we are thinking this is what, but is this numbers good or not? It has to be based on a lot of peer comparison within the industry, and comparing industry to industry also might give the true sense of what those numbers or what those mean.
Correct. Cool.
So I applied most of things what is what we discussed and what is there for one company. I didn't do for multiple companies, but I
That's
think
okay.
if you do multiple companies, it will become more and more. Especially how the source of funds goes to the application of funds, like between the assets and liabilities. All your liabilities is your source, and your assets you go and apply on your assets, right? So how the movement is going on, trying to get overall high level picture of what has happened in the company. I mean, that's one interesting thing, me coming from business to numbers background, because in business I know what's going on, but I don't know the numbers. But when I see it now, the numbers now, without knowing the business, I trying to make understand of what's happening in their business. Right? It's like a different perspective of looking at. When you're in the business, you don't have time to look at a lot of numbers. You don't care about the numbers. You try to just make a concrete understanding and just go ahead with it. But I think investment is actually, you don't go into the operation of business, but you try to see how good is that operation, or how good is their sales, or how good is the growth of sales, and overall what's happening in business. I think numbers is giving the crunch of what's going on in the company, without knowing anybody about the company, without knowing how the company, what's, I mean, you don't need to go to the inside of what's happening. Just looking at the numbers, you can make some sense of how those businesses are operating, or how this company is operating.
Perfect. Great. So it feels as if Himadri made the journey from being a businessman to an investor, and probably he's coming back as well. So the Warren Buffett quote is applying. You will see more application of it as we go on. Glad that you did it. You tried and made sense out of the numbers. We'll discuss them one by one when we look at a practical example. Okay. So
Yeah, sure.
okay. Thank you for sharing. Okay. Uh, Srikant, would you like to go next?
Sure, sure.
The rest of us
Yeah, I
can
have.
process on mute. Yeah. Yeah,
Yes.
please go.
So basically, I started a company called Britannia, like it's a simple biscuits company. Um, but I could not able to complete the entire all the ratios or all the numbers as such, but I could able to do some margins, maybe 7 or 8 items.
Okay.
But yet to work, I need to work on this one. I could not really find time this week, but I will work on it.
No problem. Fair enough. The idea of giving you multiple companies and asking you to do so is not to put you through a lot of effort, but yeah, to help you understand and get it hardwired in your brain. So by next session, please complete it. I
Sure.
understand we all are working and we would not have got the time, but please do it next time. Okay.
Sure.
And try making sense of the numbers wherever you have questions. Don't worry about how good or bad the question is, just ask. I have asked questions like, what is the difference between net margin and gross margin? When I started, I was an engineer, and an engineer knows nothing about accounting, at least to begin with. so, so feel free to ask questions. Thank you.
Sure.
Thank you for sharing your feedback. Okay. Over to you, Hiran. Yeah, Pranay. Okay, Pranay
So
wants something. Yeah.
I have done analysis on. I have taken two companies.
Mhm.
So I wanted to just understand about the range or what we can say. Yes, I'm just sharing my screen.
Pranay, hang on. Let Hiral complete. Since you and Shravan shared last time, we'll go ahead with Hiral first and then we'll come back to you guys. Okay?
Okay, sure.
And sharing the screen
Okay.
part we'll do later. Okay. Yeah, Hiral.
ओके लाइक जो भी रिलेशन था, डायरेक्ट रिलेशन एंड इनडायरेक्ट रिलेशन, वो वाले चीज ने मुझे बहुत ज्यादा हेल्प किया, बिकॉज उसमें मैं कनेक्शन बना पाई तो मुझे और ज्यादा समझ में आने लगा कि इसका इफेक्ट किधर हो रहा है, कोई पर्टिकुलर चीज का इफेक्ट इनकम स्टेटमेंट का इफेक्ट बैलेंस शीट में कहाँ हो रहा है और कैश फ्लो स्टेटमेंट में कहाँ हो रहा है, वो मुझे हेल्प कर रहा था. एंड देन परसेंटेज जो कॉमन साइज वाला फाइंड आउट किया, इनकम स्टेटमेंट है, बैलेंस शीट है, उससे मुझे रेशियो समझ में आने लगे और इजी लिख के क्या रेशियो है, उस रेशियो का मीनिंग क्या है, और उसे अप्लाई करने से ट्रेंड पता चल रहा है कि ओवर द पीरियड ऑफ टाइम क्या इंक्रीमेंट हो रहा है, डिक्रीज हो रहा है, तो वो एनालाइजेशन करने में बहुत ही इजी हो रहा है मुझे. तो वो मेरा एक्सपीरियंस था. मैं सबसे ज्यादा कंफ्यूज फंड फ्लो स्टेटमेंट में हुई क्योंकि मैं अकाउंटिंग इसमें चली गई कि वहां पे मुझे बहुत सारे कैलकुलेशंस करने हैं, सो मैं बहुत कंफ्यूज हो गई. तो वो आपने सॉल्व कर दिया मॉर्निंग में, तो वो इजी हो गया मुझे करने के लिए. अदरवाइज एक्सपीरियंस बहुत अच्छा था और धीरे धीरे सीख रहे हैं. लाइक मल्टीपल कंपनीज को कंपेयर करेंगे तो और अच्छे से समझ में आएगा कि किस तरह से चेक करना है, किस तरह से इन्वेस्टमेंट को देखना है.
Perfect. So कॉन्फिडेंस है ना आपको कि आप किसी भी कंपनी को देखो तो उसको समझ सकते हो? I mean, दलाल स्ट्रीट में खड़े होने की जरूरत नहीं है, वॉल स्ट्रीट में खड़े होने की जरूरत नहीं है. बस नंबर्स हाथ में है ना, तो जन्म कुंडली हाथ में है, बस जन्म कुंडली देखना आना चाहिए. चलो, thank you for sharing. Another question to Himadri and Shrikant: did you do the matching part, the printout and the matching part?
This one, I think I did the analysis and did some match, and then I reanalyzed. Then I feel something is wrong. So I think I feel we need still some clarity on. We know every detail of what it is, but whether it is directly impacting, because I feel a lot of things are all indirectly or directly connected. But
Exactly. That is exactly the purpose of the exercise, to figure out which one is connected to which one.
I mean, all of them are. Yeah, it's like a mesh that is there, but you need to look at what are things that are directly maybe impacting, which has a direct connection and stuff. So I still did not finalize on that. Maybe
no problem. The finalization part can take 3 more sessions. Don't worry about it. The initiation is important. You have to stick with one chart paper and persist daily for half an hour. Only then it will work.
Yeah,
so
absolutely.
Keep at it. Don't get bored. One is for primary connection, the other is for higher level connections. Okay?
Right. Yeah.
Okay. Shrikant, did you get a chance to do that?
Yes, right. I also we were actually before our call we were and discussing the same. As
Okay,
Nemo mentioned, right? So we have got we know that there are links, but exactly we are trying to figure it out what is the direct and indirect. So that is where we are pleased with, we have some ambiguity. Yeah, I think we need to still work on it.
okay, fair enough. But do keep at it for the next 3 sessions. Try and complete it
Sure,
by the third session from now.
sure, sure.
Okay, but
But at least
persist
I'm
with it for
targeting
half an
for
hour a day.
sure, sure. But at least for the next week when we present, I'll at least I target to present it, whatever I will have done
Sure,
it.
cool. Thank you. Okay. Uh, over to Pranay. Yes, Pranay, you were saying something. We won't be sharing the screen right now. We are just discussing. So you tell us what is it that you experienced. If you have any challenges, please share.
I was just analyzing Bikaji, and I took Vector and Bikaji. I was analyzing it. So for fund flow statements, so sometimes it becomes difficult to find the trend, just like because most of the percentage as just we calculate percentage, no,
Right,
for that for that that most of the comes from total other assets items, right?
right.
So I just took for Bikaji and just example for also Vector for FY23 versus 22.
Hmm.
It was total other asset items increased by 43%.
Hmm.
So for that uh, total other asset item, we need to take more deep into and take the breakdown from the annual statement, I think.
See, okay. So let me tell you one thing. It when you look at screener, do you see a plus sign beside total other assets? Other assets?
Mm,
Can you open screener and just see that?
just a second. Yeah. In other asset only, there is other asset items.
Okay. In other assets, there are other asset items.
Yeah.
Okay. Fair enough. That's not a problem. Don't worry about it. So if it is one off in 1 year, that's not to worry in one period. But if it persists, you will need to go and check. Okay, in the annual report.
Yeah. And
Okay.
Shreya
And
also
just one
how to
thing.
find that
You
name.
okay? Just 1 minute. The fund flow need not be calculated for every subsequent year, but for a period of 3 year, 5 year, 7 year, 10 year, that sort of thing we discussed, right?
Yeah.
So that is how you look at it. Only then you will get a perspective. Yeah, you were saying something. Sorry, I cut you off.
Yeah, just that only for just if I've taken for 1 year, 2 year, and 5 years, it was from 18 only it was taken. So if we take example, if current
Then
working
in that case, don't take 1 year. Look at 3 year and 5 year.
okay,
1 year, 2 year is of no use. Anyways, what was your finding?
so basically if it is increased by uh, means uh, how to analyze it from 5 years to 1 years or 1 year to five, how to analyze it.
Ah, so we'll come to that part. Okay, Pranay, hold on to that question. We'll do one practical exercise right now. You will see that at that point in time, if you don't understand, please raise this question.
Okay,
Okay.
okay.
Okay. Anything else that you
Hmm.
have as a question?
No. That was only how to go.
Okay. So did you take formulas from the presentation that I shared, or you used your own formulas?
No. Taken from the presentation. Took
Perfect.
all the.
Please stick to it, or else there'll be deviation and then there'll be confusion. Okay.
No, I'll take also compared with the peers, both of us.
Right. Fair enough. Thank you so much. In fact, in the presentation, one formula is not as per convention, which is return on capital employed. it usually is done as profit before interest and tax, right? As the
Yeah.
numerator.
Yeah.
But I have taken profit after tax as the numerator. It's for a reason that I've taken it. I'll explain the reason for it. Okay.
Sure.
And it's only going to lessen the number and make it more conservative. No harm in deflating a number than inflating a number, especially when it comes to return metrics, just to get an idea. Okay. Okay. Thank you, Pranay. Thank you for sharing. We'll cover what you spoke about in this discussion after the small presentation that we have. And at that point in time, we'll try and answer your question. Okay.
Sure. Thanks.
Okay. Thank you. Yes, Sean, over to you.
Yeah, Shrey. So I didn't do any specific company, but I did that matching exercise that is thinking of the linkages between the three statements. And yeah, so it was a good exercise. If you want, I can just talk through, what I thought about, my train of thoughts and all that.
We'll do that talking part. Hold on to that sheet of
Yeah.
paper or wherever you have done it. We'll talk
Yeah.
about it 3 sessions from now when everybody has thought about it, because we all
Okay.
have more time sometimes and less time sometimes. So I understand it's a thorough thought experiment that you have to do there. उसमें एक
Yeah.
महीना minimum लगाना चाहिए आदमी को. So it's a good thing.
Yeah.
But do it whenever you're doing it. Do it religiously. Okay. Okay.
Yeah.
Fair.
No, I've actually taken down notes, points, written down my thoughts in the Excel sheet so that I'm able to, speak up when required.
Perfect. Just keep on to it. We'll speak in the next 3 sessions.
Yeah, sure.
Okay. Thank you, guys. Thank you for sharing your experience. The idea of getting you to crunch numbers before actually going ahead and giving you the session is actually to familiarize you with the calculations, or else if I tell you in the beginning and you have not done the calculation, it will turn out to be overwhelming, especially for someone who is not so number savvy or so number familiar. I'm not that kind of a person. I would get irritated if you show me numbers all of a sudden. But if I've calculated it, it is like, हाँ यार किया है ना, हो जाएगा, कोई बात नहीं. So that is what we feel. It was to get you into an emotional comfort zone that I thought, what I feel, somebody else might feel that way. So I thought, let me do that. And this way we'll be able to do the whole exercise seamlessly. I have crunched the number for Hatsun Agro Products. It has been my holding for a long time, though I've done it for the recent times. I will share the screen after the small presentation that we have. Okay. Let's delve into what we have. First was the matching part, which you guys are continuing. So this is something that we have already discussed. These are the matrices and ratios that we are to discuss. Okay. So we'll discuss this as we go to the sheet. We'll talk about each of it and then look at numbers. Okay. Or else it will be a double repetition. And here are the explanations that we had. I'll cover it again there. We can come back to the sheet as well. Okay. So in the explanations part, you had return on equity. There were 2 different formulas for return on equity. One was, so net profit by sales is what? Anybody? What is net profit by sales called?
Net margin.
Perfect. Do we all agree it's net margin?
Yes.
Okay. So the first blue colored thing is net margin. Sales divided by invested capital is what? Pranay, hold on. We'll ask someone else. Okay. Before we do that, what does net margin tell us? If the net margin is 5%, what does it mean? Wait, Pranay. Let others answer.
Net margin is
Anybody?
5%.
If net margin is 5%, how will you explain it to a 5-year-old kid?
So if you have 100,
Oh,
100
not 5
rupees,
years. 10-year-old. 10-year-old. 5 year will be too difficult. 10-year-old
so
kid.
if you have 100 rupees, you go and buy some stuff, say for 60 rupees, but you traveled using 10 rupees or 20 rupees using, I don't know, the auto or taxi or something. And then in between, maybe you drink water or spend something. And then at the end, when you come back, maybe you're left with 20 or 30 rupees, out of which you give it back to person who gave you the 100, and you are left with 5 rupees. Like you give
Fair.
25 back to somebody who gave, like something like a tax, but yeah, assuming that you are left with 5.
Okay, fair enough. Thank you, Madhuri, for your explanation. Anybody else who would like to take a shot? Would like to take a shot at it? How do you define net margin? Simple.
Yeah, simple
Yeah.
means maybe I'll try to
Please.
whether it is right or wrong. Let's assume whatever we sell, right? And how much you are putting into your pocket and take home, basically.
Right.
The remaining is all you have to pay to different people. So that your take home. In a nutshell, example, in a salaried person, right? Okay.
Right.
If I have a gross salary of, for example, 1 lakh, but I will be getting 60,000 in my bank account every month. So that is my net profit. Let's say for
Good. That is also a very good explanation. Okay, that reminds me of a joke which people keep posting on LinkedIn and all, where a fellow says, a fresher says to the HR, my salary is 8 lakhs or 12 lakhs, but per month I am not getting 1 lakh. Why is that so? So the fellow, the HR says, बैठ जाओ बेटा अभी बहुत कुछ सीखना बाकी है. So that's the gross and net wala example. Okay. Anybody else who would like to take a shot? Now, Shravan, Pranay, Hiral, you guys can try. Please go on. Sorry, I kept you waiting because others do not have a accounting background. I want them to speak first. Yes, Pranay, you wanted to go. Feel free to.
For example, if we take an example, like if we are selling samosa, if we have a stall and if we have sale of 1,000 rupees, and for that 1,000 rupees we have cost of total material and all, everything goes, we have 800 rupees, for example, and we are left with 200 rupees. So basically that's net margin. Total sales minus whatever expenses we incurred for our business. So 20% is our net margin.
Great. That's a wonderful explanation. Thank you, Pranay. Okay. So I understand all of you understood it. Okay. Yeah, Himadri, you want to say something?
Yeah. So because I was just rethinking, so the difference between net profit and net margin are same, right? Net profit is actually numbers and margin is just a percentage on the sales, right?
Absolutely. Absolutely.
Both mean the same. Okay.
Absolutely. Both are the same. Good. Okay.
Yeah, basically,
Next.
margin is percentage. Basically, margin is a percentage.
Yeah.
Percentage, and then the profit is in numbers. That's
Right. Okay. Next, coming to the next number in green in the first equation. Sales by invested capital. What does that show? What is that number called? Anybody? Not people with accounting background first. People with non-accounting background first. Sales by invested capital is what?
how much.
Sorry, Shrikant.
How much? Yeah, maybe I'm just thinking aloud.
Yeah,
How
sure.
much sales happened on my investment? Okay. So
Exactly.
that's,
So that is the explanation of it. Good on the explanation part. What will you call this number? Sales by invested capital is called what?
Capital return.
Sorry?
Capital returns. Capital
No,
returns.
no. It is called, it is one kind of capital turns. It is invested capital turns or invested capital turnover. How many
Okay.
times are you rolling your invested capital in terms of sale, right? Okay. Can someone explain me invested capital turnover?
Yeah, I think you just explained. So it's basically, if I put 1,000 rupees, how many times, if I get 5,000 as sales, which means my money is rotated 5 times, right? So it's like how many times, like, of course, it's in a period of a year or so. So it talks about how many times my capital is rotated in a year.
Perfect. Do we all agree with him?
Yes.
Shravan,
Yes,
Pranay?
yes, yes.
Cool. Now comes invested capital by equity. I'll let Pranay answer this because this will need some accounting background for someone to explain. Yes, Pranay. I could be bluffing, huh? It doesn't need an accounting background. I'm just bluffing. It's just an adjustment number. But what does it mean?
So
Okay, anybody who would like to take a shot?
Let me try. Equity means no, so it's not something.
It's
as
5
written.
o'clock.
So I was thinking, like,
shareholders' equity.
how much are you getting? How much you
Equity means what you own. Equity means what the shareholder owns. Correct? Invested capital is how much of equity is productively invested in net fixed assets and working capital, net working capital, right? We are trying to see what percentage of equity is invested in the actual business. Okay. One is percentage, the other is times. You can call it times. How many times of equity have we invested in invested capital? If we have invested a lot in invested capital and there is less equity, what does that mean?
Yeah, means capital is used for other things which are burned out, maybe.
No.
You've
If
taken
my
a lot of
equity is
leverage.
less and invested capital is more, what does it mean? Yes, Shravan, you wanted to say something. Shravan, please go on.
No, I said that simply means you have taken a lot of leverage.
Exactly.
Yeah, which is magnifying your return on equity.
Exactly. So it is leverage. Okay. It is the leverage that the company has taken. If invested capital is more, equity is less, it means the money is coming from somewhere else, right? And it has to be leverage, because if it was coming from liability side, any other one, current liability, it would get subtracted and it would reduce, not increase.
Right,
Correct?
right. Yeah. So let me try and understand. So if I put
Sure.
1 lakh and if we own 10% of equity, so which obviously means that out of 1 lakh, so the value is 10 lakhs, right? That's why I own, say, 10%.
Correct.
Now, if I own 5%, which means the capital, I mean, external, the value should be more. Instead of 10 lakhs, it could have been 20 lakhs. That's why I'm owning 5% on 20 lakhs.
No. This is not to do with owning. Okay. You're confusing market price or shareholding with what we
No,
are talking.
I'm talking from an equity, like 10% holding of the company is what is equity, right?
Yes. No. On the balance sheet, equity simply means all the money of all the shareholders.
Okay.
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 So,
Now I get it. So, total money invested into the company, what says that equity that is there and how it is being utilized. Like if the invested capital is less, but the equity is equity is less, which means there is external
Funding.
investments that have come into the company in somehow, which is actually good for the company.
Oh, no, my
Can
friend.
I try? Can I try in a different
No,
way?
my friend. Not always good for the company.
Mm.
It can be very dangerous for the company at times. But there are companies or there are industries that run on uh, more invested capital than equity, way more invested capital than equity. So usually what you will see is, if you see there is a similarity in the formula which is there on second line and the fourth line.
Hmm.
The fourth line, we have margin, we
Capital
have capital employed turnover. Okay.
Hmm.
Instead of denominator invested capital, I've put capital employed. Okay.
Hmm.
And again, in the subsequent numerator, just to cancel, I've put capital employed as the numerator. What is capital employed? Capital employed, it is total debt plus total equity. Total funds on the liability side invested in the business.
Hmm.
Right? So there is a similarity. The first one is margin, second one is turnover, third one is leverage ratio. We call it leverage ratio. You can call it invested capital leverage, you can call it capital employed leverage, you can call it whatever. You need to understand the meaning of it. You call a sparrow a crow, no problem, as long as you know what a sparrow is. Okay. You don't feed a sparrow a hen. Maybe it might eat a hen, but yeah, I assume that it's a vegetarian. Okay. So why I'm telling you this. Okay. Tell me a business. Now let's come to the thinking part. Okay. We'll go ahead a little. Tell me a business that runs more on the first. There are three parameters, right? Margin, turnover, and leverage. So tell me a business that runs more on margin and less on turnover and leverage. Any example?
Rolls Royce.
Luxury.
Yes, luxury. That's the word. Rolls Royce. That is correct. Ferrari. That's correct. I don't care how many cars I sell. I earn more per car. Right? Tell me a business that has less of margin, less of leverage, and more of turnover.
Think like petrol bunk. FMCG is there or retail, but more than
Petrol
retail.
pump.
Petrol pump is.
Let's say petrol pump. Do we all agree to petrol pump, guys?
Yes.
Anybody who disagrees, please come to my home. My family owned one. I established one 9 years ago. Sold it 7 years. I mean, 2 years, 1 year, 1 or 2 years ago. And I mean, the day it got sold, I went to the temple and actually did Sakshat Dandvat Pranam. Okay. So that's the kind of business that is. It's very thin on margin. Okay. Tell me a business that is low on margin, turnover, and or which is okay on margin, turnover, but high on leverage. Shravan and Pranay can answer it very easily. Don't answer. Pranay, wait. Anybody else who would like to take a shot?
Yeah.
Someone
Because
building
real
a
estate-
company or
Srikanth
like
was
an
saying something.
Yeah.
Srikanth
real
is
estate,
sorry.
real estate,
Real
real
estate.
estate.
Okay. Okay. Fair enough. Okay. Real estate is one example. Anyone else? Any other?
I was thinking like more of someone who's building like R&D kind of product. They're also doing sales and also margin is there, but they're also building an asset that can produce for future value or future sales.
Right. But it's not necessary that they're leveraged. They could have more equity, or they could have recurring equity. That's
Right.
not necessarily a model. Think a little harder. Which is a business that does money on other people's money?
The other people might leverage is like where you get more of advance and stuff, right? Credit bank like banking kind of things, or
Sorry,
uh,
bank. You said bank
or
and
finance,
credit. Yes.
credit
Pranay will help
companies.
you with that. Pranay, are we
Yes, sir.
talking about this right?
Yes. Thanks.
Banking business. Okay.
Asa.
Yeah. So banking business, you have the last variable, which is the highest. Okay. The highest I have seen has been around 30, the multiple. The most common is 10 to 15. And anybody who does it below 10 or around 10 is doing a good job. Is my understanding correct?
Yes.
If you go and see Kotak Mahindra Bank, you would see that number to be way lower than any other bank.
You're talking
UCH
about the return on equity number?
No, I'm talking about the last multiple,
Only
the
in
orange
which
colored one.
last multiple?
In both
In
in both the
capital
equation
wise.
line number 2 and 4, the orange colored number, invested capital by equity or capital employed by equity. It's called the leverage multiple. That will be the highest with a bank, NBFC sort of companies. Okay. Okay. Tell me which company, which type of business would have high margin and high turnover?
High margin and high turnover. That's a dream business.
There are dream businesses, my friend.
High margin and high software IT. Yeah, sorry.
Okay. Fair enough. That cool. The margins is also high, turnover is also high. Right.
I don't know. Pharmacy has also, I think, good margin.
Sorry.
Pharmaceutical industries.
Yes, pharma can have. What else? Pranay, would you like to contribute? Shravan?
Coca-Cola?
Coca-Cola?
Yes.
Yes, you're right. Any branded FMCG sort of a business is amazing in both. Look at McDonald's, look at KFC, look at anyone. You will have above average margin, above average turnover, right? How much do you pay for a burger? In India, how much do we pay, guys?
One basic 150.
Don't talk about basic burger. That is only we bachelors eat. I mean, I'm no more one, but yeah, when I was one, I used to eat them a lot. But yeah, the average burger, how much would that be? 150-200 रुपया?
Yes.
200 and above.
Right? 200 रुपए पे बर्गर पे 20 रुपए का मार्जिन तो बन ही जाएगा ना?
Yes.
ज्यादा.
मुश्किल है,
ज्यादा.
आराम से इससे ज्यादा ही बनेगा, correct? So, and how many people go? How much does it cost to set up a McDonald's outlet? And how many people go there? What would be the turnover, like high or low?
High turnover. High turnover.
Sorry, high turnover, right? That's the kind of business that we are after.
So,
Okay, and we don't want any high leverage business unless you trust the bank.
can we say that
Yeah, Hiren,
कि
you were saying
आपने जो बोला पहले लास्ट ऑरेंज वाला फॉर्मूला वो जिसमें ज्यादा है लेवरेज, तो वो वाले कॉम्पिटिटिव काइंड ऑफ बिजनेस उसमें आ जाएंगे क्या, जिसमें कंपटीशन ज्यादा है? ओके.
जरूरी नहीं है. Competitive kind of businesses are more likely to be high turnover businesses than high leverage businesses. High leverage is a choice or a structure in the business model. Okay. कुछ business models में वो चीज होती है और कुछ में नहीं होती. ठीक है. पर high turnover low margin जो business होता है ना, look at a petrol pump, look at a distribution company. Look at a commodity trader. I mean, ekdam, commodity trader. They would look to buy even for 5 rupees. Look, why? Because they are buying in
Right.
thousands of kgs or thousands of tons, right?
Yes.
Okay. Have you all seen the movie Pushpa?
Yes. Yes.
So by bulk में तो वो भी discount देता था, right? Okay. Fair enough. Cool. I think Shrikant dropped off. We'll just wait for him. Till then, we can discuss something. Anything you want to discuss on this? Okay. Just let me tell you one thing. So this type of analysis, the blue, green, and orange, the margin, turnover, and leverage. You take it invested capital leverage, capital employed leverage. See, what basically we have done is, in the denominator, I've put sales in the first one. In the subsequent one, sales is in the numerator. So basic cancellation, right? Sales cancel. Invested capital in the denominator in the second variable, and invested capital in the numerator in the third variable. Denominator, numerator cancel. What are we left with? Net profit by equity, which is the formula of return on equity, right? This type of analysis, breaking down return on equity into sub parts so that they cancel out, is called DuPont analysis. Now, the actual DuPont analysis is not the equation that I've shared. You go by the book, it will be a different one. It will be return on, so it won't be invested capital turnover, it will be asset turnover. But I've gone ahead and made the changes because I thought I had the authority to do so. I mean, who cares whether I have the authority or not? I only care whether I get my analysis right or not, and I'm able to make better judgment or not. I'll bend any rule as long as it is within the law. And nobody stops you from being creative. So that's what I've done here. And the other formula also is similar. Okay. So it cancels
Yeah.
out. And return on equity tells you, sorry. Yeah. You were
I'm
telling.
still not able to comprehend of the difference between the first and second one, right? When you are actually canceling out, do you mean that when you actually put on a sheet or a paper, you actually see all of them? Because if they're, I mean, mathematically, if they're canceling out, you don't need to have the other formula. You can directly put the net profit by equity, right? So what?
Madri, hold on to that thought. Okay. When we come to the seeing part, you will tell me, Shrey, I see a lot now. Just hold on to it. Let's wait for 40-45 minutes. I have it calculated. We'll come to that part. Okay.
Okay.
So for now, okay, Shrikant, what we were discussing is
Yes.
if you see the formula, it cancels out. The sales in the denominator in the first variable cancels with the sales in the numerator. Invested capital in the denominator of the second variable cancels with invested capital in the numerator of the third variable. Similarly for the
Right.
second formula. And it all comes down to net profit by equity. Net profit by equity is nothing but return on equity. Okay.
Right.
What does return on equity tell you? What do you understand by that?
Okay.
Anybody? Shrikant, you can go ahead. Anybody can go ahead.
Yeah, maybe in a layman terms, how much I'm putting money, and out of my money, how much I'm getting back.
How much I'm
As
getting
a-
back every year. Every
Yeah,
year,
every
how
year.
much I'm generating.
Yeah, every year.
Right?
Yeah, if I put 100 example as investment for the year, or for overall example, owning for that, whatever it may be, for like say, I assume 100 years example, I'm just giving an example. Every year, if I get 500 example, then 500 into 100, that would be my overall thing.
500 by 100, right?
Yeah, 500 per
Yep.
year I will be getting. So for
Yeah.
a perpetual years, infinite years.
So your return on equity should be 500 by 100, correct?
Correct. 500 by, yes, you're right. Correct.
So it is 5 into 100, 500% return on equity.
Correct. Correct.
Also, the company gives certain dividend and retains certain money, which gets added to the equity. Share capital
Correct.
plus reserves and surplus. And so the equity also balloons over a period of
Correct.
time. Okay. Fair enough. We will
Question
leave
on-
it here. Yeah.
So the return on equity. So does this include the dividend? Where does the dividend go?
No.
So are we talking dividend itself here, or if the company some reserve or something?
Okay. So dividend is paid out of annual profits. Actually, it is paid out of annual cash flows, not annual profits. So
Hmm.
whatever dividend is paid out is subtracted from net profit, and whatever remains of net profit after paying of dividends and taxes, if at all there are any taxes, whatever remains is called retained earning for that year, which gets added to reserves and surplus in the balance sheet. Remember, we did that calculation?
Yes.
And share capital plus reserves and surplus is equal to equity,
Hmm.
Okay.
Okay.
which comes
Whatever
as the
it is.
denominator.
So obviously, so equity, it will be added into the equity.
Correct.
Equity will increase.
Okay. Cool.
So this is not like a dividend. I mean, return on equity is
No, it's
not a
not like
dividend. Yeah, it's
No,
basically
no.
telling. It's basically telling in the company the profitability versus the equity. It is telling how good the company is, maybe like growing or giving value over a year.
Okay. So it's simply put, if you assume your equity to be the principal, net profit is the return on the principal. Okay.
Right.
Net profit is simple profit. Net profit by equity is profitability. The
Profitability.
ability to generate profits from equity by investing it in the business, reinvesting it in the business. Let's move
So
on.
this tells like so what you're telling is one is profitability, and this tells like the reinvestment capability or something like this. You said in the last word, the capability.
It tells me the return generation potential of that company. A lot of people, even the best of the investors, sometimes when certain conditions are met, when there is not much of leverage, they take return on equity to be one metric for judging whether the company is profitable or not. Okay. So tell me, if you are in India and FD gives you 7%, if you are investing in a company, what is the bare minimum return on equity would you expect? What is the return that you would expect the business to generate? Yeah. Pranay, you want to go ahead?
Some 14 to 15%. Basic.
So Pranay says 14 to 15% is good for me. I'm not talking about whether at how much you buy a stock, at how much you sell a stock. Think like a share owner. Think like the owner of the business. If you own the business, how much return is good enough return? So Pranay says 14 to 15% is good. Okay. So that 14 to 15% on equity, is the company generating or not, is what the question is. And that helps you compare that return on equity number to an FD or a saving bank rate, or to another return on equity in another company. We are forgetting that the shares are listed. We are only talking as if we own the business, and we are thinking like owners.
Yeah, I mean, we are all here talking about the whole company or the business itself, to see what is the return on equity for the company.
Right.
Okay.
So it basically tells you, if you've put 100 crores, whether you are generating 15 crores, which is your bare minimum return requirement. If you're not generating 15 crores, the return on equity is lower than 15%. It means the company's return on equity is not up to the mark compared to your expectation or your benchmark.
Okay.
You need to look for companies that have higher return on equity, provided they have low leverage. Usually, even with banks, you would want them to have leverage within a limit. We'll not go to banks now, or else things will get complicated. We'll come to that later. Okay. For now, assume that we don't want leverage. No matter how much efficiency, how much more profits leverage can get us, we are risk averse people. We don't want leverage. Okay. The one quote of Warren Buffett that you should get hardwired in your head is, I have seen a lot of intelligent people go to zero because they do not understand a simple concept that any long series of numbers multiplied by the term zero produces a zero. And that zero, my friend, can be your leverage. When you borrow money and God forbid something were to happen and you are not able to pay off and you are declared bankrupt, all the effort goes into drain. Correct? Right?
Yeah. Yeah.
So that's what I'm trying to explain. Okay. So what I've done is I've connected things here. Look at the ratio properly. Quality of earning on one part is current quality of earning, which actually should be the owner's earning by net income. So when we were finding out quality of earning, what did we do? Owner's earning is sort of a cash flow variable. We found a proxy for owner's earning to net income. What is owner's earning ka proxy? It is operating profit minus tax plus depreciation. Or you say operating profit minus tax, and or simply say operating profit plus depreciation minus tax in the denominator, and in the numerator put it as CFO minus. Do you want to subtract anything in the CFO, or you just take CFO?
I think you mentioned only CFO. No.
Exactly. So I'm playing around with you. You are right. I mentioned only CFO. So CFO divided by operating profit plus depreciation minus tax. Correct? That's the proxy. Why? Because estimating owner's earning would require you to know the company end to end, which is probably a job of 2-3 months. So you won't wait till then, right? You want a quick judgment, quick indication metric, and hence we created that metric. It can also be seen by free cash flow by net income. Why we don't see free cash flow by net income is because free cash flow is simply cash flow from operation or net cash flow from operation minus interest minus capex. But if a company is growing very fast, its capex will be very high, which will leave you with very little free cash flow. And then you will feel that the company is not generating enough, does not have a good quality of earning compared to its net income. Hence, we are looking at CFO divided by operating profit plus depreciation minus tax. Do we agree?
Yes.
You understand
But,
this?
You mentioned CFO by depreciation plus interest. I mean, because in the calculation that I went through was plus interest, but not without the tax.
Okay. You're right on that. There might have been an error if I have not subtracted the tax there, but tax is usually subtracted, and I have taken interest simply because I didn't take operating profit. I took profit before tax, or I took
Yeah,
profit after. I took
No,
profit after.
before tax. That's
Okay.
why maybe we didn't do the tax minus.
Okay. So we should be subtracting tax. Profit before tax plus depreciation minus tax. That's a calculation error from my side, not your side.
Sure, I think. Yeah, but I'm not bit of clear. We can clarify if you want later. But profit before tax means there's no tax, right? Then why do we need to
Prof-
deduct tax?
okay. we need to deduct tax because cash flow from operation, net cash flow from operation is after tax number.
Okay.
That is why we have to balance it out.
Okay. On the top, you are putting tax for the cash flow of operation. Tax is included. That's why we are removing it at the bottom.
Correct. We
Okay.
have to make sure that it is apple to apple comparison.
Yeah.
Okay. Srikanth, we discussed this recently, so I hope you remember that.
Yeah. Correct.
Fair. Okay. Shravan and Pranay, you guys remember this? I've been talking about this for a long time now with you people.
Yeah. Just to confirm, profit
Yeah.
before tax minus tax
Huh.
plus depreciation.
Correct.
Right? So you have excluded interest. You have taken out interest. Okay. And ऊपर जो CFO है, that there also you have like taken out interest, right? You're removing the interest payment.
That's a good point. See, Himadri, we also need to adjust for interests. Cash flow from operation does not have interest removed. So either we'll have to remove interest from cash flow from operation or add back interest to the denominator
Yeah.
to balance it out.
Yeah.
See, the formula is, the idea is to make it comparable and look at the ratio. How you do it is your choice. You should get the concept.
Right. Yeah.
Okay. Thank you, Sean. Thank you for pointing that out. Okay. Pranay, you're clear?
Yes.
Okay. Fair enough. So that's current quality of earning as in today. Then comes the prospective quality of earning in the future. That depends on return on invested capital. What is return on invested capital? In return on equity, the first formula we had net margin, which is net profit by sales, into invested capital turnover, which is sales by invested capital. So if you cancel out sales, you will be left with net profit by invested capital, which is return on invested capital, which tells you the exact profitability of the running business, not the company. Return on equity is for the company from the shareholder's perspective. Return on invested capital is from the manager's perspective because he's only managing what is invested in the business. He doesn't know what you have borrowed, what you have not borrowed. He only cares about the business, right? So that is return on invested capital. Are we clear on this?
Yes.
Yes.
Himadri, I'll just come back to this. So see, the second line, if you multiply the first blue term to the green term, you would be left with net profit by invested capital. And that is called return on invested capital. Okay.
Right.
Which tells you the profitability of the running operation.
Right.
It is the manager's index or the manager's metric. He doesn't know whether you have got it from equity or you have borrowed or you have danced. He doesn't care. Okay. And the prospective quality of earning depends upon the three set of things that are mentioned there: quality of the management, nature of the product, business structure. These we'll discuss in the subsequent sessions. And these are really important qualitative factors. So we spoke about converting quality to quantity and quantity to quality. Remember that term? Remember that statement? All of you remember it? One of the attributes of becoming a very successful investor is ability to convert quantity to
Yes.
quality and
Numbers
quality
into
to quantity.
yes.
First presentation, it was there. Narrative to numbers,
And
numbers to
the
narrative.
stories.
Is
Yeah.
what I'm talking about. Yeah. So the blue ones, the management quality, product nature, and business structure, are stories that need to be converted to numbers. And the numbers need to be converted into those parameters. Okay. The next is
The ROIC is return on invested capital. Okay. Yeah.
See, if you see at the bottom, ROIC is net margin into invested capital turnover. It is return on invested capital. Okay.
Right.
Fair enough. This is the modified DuPont that we spoke about just now. The second equation. The first one is components of profit growth. So profit growth can come from two sides. Either you do more sales or you control cost, right?
Yes.
More sales can be done by pricing each product more, which is pricing power, or selling more in volume by keeping the price constant, right? Like in science experiment we keep one variable constant and vary the other. So you have got two variables for sales growth, volume growth and pricing power. Now tell me, if uh, tomorrow a washing powder manufacturer has to increase the price of washing powder by 10 rupees, do you think he can do it without thinking?
No.
Or we are listening from someone who would give us the exact perspective that we need. Thank you, Hiral, for that. Now I'll ask you another question. If a baby food manufacturer wanted to increase his price by 10 rupees, can he do it without thinking?
Yes, he can.
Yes.
Yes.
He can. Boss, there is only
Done.
one thing in the world that a drunkard will not drink and buy. That is baby food. Right? And you know why, who is where. I mean, why Nestle is Nestle and why HUL's washing powder business is washing powder business. No matter whether it is HUL's or anybody's, but washing powder business is a commodity business, sort of a commodity business. Okay. So that's a perspective. Coming to important parameters related to margin. So first is quality of earning. Sorry, it's a bit small, I know. I will just enlarge it. Sorry. Just give me a moment. I'll figure out how to enlarge it.
You're on Mac or
No,
Windows?
I'm on a normal one.
I think Windows plus the window button with plus might zoom in.
Okay,
Even in
just
the
let me.
presentation.
Where is plus?
It-
No, it doesn't.
No,
Never
do
mind.
shift-
I'll
right
tell you
click.
what. No worries. I'll tell you what it is. It is visible. Don't worry. So net margin depends on quality of earning. Okay, it depends on gross margin. First, you remove the raw material cost, then whatever you're left with is gross margin. Then there is operating cost to sale, which is the third parameter. You remove that, you're left with operating margin. So it depends on these three things operationally. Yes, leverage wise, it depends on interest also, but we are talking about operations. We are interested in companies with little or no borrowing. So we are not taking interest as a variable. Okay. Then comes invested capital turnover. It depends on sales. It depends on net fixed asset, which depends on capex, and depends on working capital, which depends on inventory, receivable, payable, customer advances. Okay. The third one, volume growth, depends on volume can only grow if the capacity to produce the volume grows. Correct?
Yes.
Right? So invested capital has to grow. Upfront cost investment, you have to make. There are certain costs that are like investment, but you have to do it then and there itself. That's another part. Invested capital growth depends on fixed asset growth and working capital growth. Okay. Don't worry about the picture. These come from two articles that I've written. I'll share the link of one of the articles, which contains the link to the subsequent article. Your learning outcome application this time is to go through those articles and prepare questions or understand and figure out and weave that in your head. If you have any questions, you can come back. So you have all those pictures elaborated in that article. They are on LinkedIn. You can check them out. I'll share the link right away. Give me a minute. No, I won't share it right away, or else everybody will be on it. So I'll share it at the end. Do remind me to share it. Okay. Any questions still here? Yes, Rahul.
Nothing. I just
Yes,
accidentally
Sean.
muted myself. No, it's okay. Nothing.
Okay.
So we're not again leverage part here.
Sorry.
Leverage part.
That's what I said, right? We as investors are interested in companies that have low or no leverage. So
Yeah.
net margin does not have the leverage part.
So, okay.
Okay. Fair
So
enough.
here we are
Yeah.
just trying to understand how the dependency of each of these things are depending on what factors, right? The capital
Yes.
turnover is dependent on this.
So
Yeah.
if you notice properly, this is related to one of the exercises that I gave you. Which exercise is it?
That
Yeah.
first converting print one.
Yes. Exactly.
And that's what happened from here. I think it becomes a bit more clear on how to understand
See,
things.
had I shown you this without asking you to break your head on that, no, you would be throwing coconuts at me. And
Hmm.
honestly, I'm not in a position to take coconuts right now. Okay, never mind. Once you read the articles, you'll get a good idea. Don't worry. If there are any questions, we'll address it. We'll just move ahead. Okay.
Yeah.
Why did we do this? I firmly believe in what Da Vinci said, which is learn how to see, realize how everything connects to everything else. So Warren Buffett had a partner who expired recently, the late great Charlie Munger. I have always followed Warren Buffett. The day I started following Charlie Munger, I realized that he was the real genius. He always spoke about being open to learning and not trying to be master of anything but jack of all trades, and being open to jumping boundaries that these professors of different departments have created just from you, for you to not let you jump from one department to another. You have all the right to connect mathematics to biology and biology to poetry. Nobody stops you. Okay. But we have a bloody structure in the world which says, you got to get a PhD in only a small discipline and become a, a man with a hammer. Boss, why? You can try and know big ideas from all big disciplines and have them in your head as thumb rules, and you can use them. This is what he called mental models. It's not about how well you know each one of it. It is how well you know how each of them interact. And what we did with numbers was see how they interacted. What I was trying to do with connecting, or asking you to connect the dots, was to making you think in terms of connections. Investing is not a business of IQ. And this particular quote is not about IQ. I mean, this is not about studying something, mastering aptitude or mastering English and cracking a CAT, or studying for IIT JEE and cracking that exam. Anybody who's good at that will not necessarily become good at investing. Investing is one game which allows a level playing field for anyone. The poorest man can compete with the richest man and beat him hands down if he has the right strategy. And the an average student can beat a top aptitude fellow. It just depends on how well they know how things interact. So learn to see how things interact. Even if you don't master uh, each of them really well, or you are a master at each, But if you know how they interact, boss, you go places. That's and I mean a heartfelt thing that I would want you all to inculcate in yourselves, and that perspective will help you not just with numbers, with anything. So Charlie called it mental models. Okay, these are nothing but thumb rules that come from different disciplines. One such mental model out of accounting, I will tell you, is imagine a man climbing down on an escalator that is going up. He's climbing down, the escalator is going up. Speed is the same. Is the man moving anywhere?
No.
No. What? How can you apply this in investing?
If your profits are up and down, no stability or something, you get 20% profit this year, next year you lose 20%, then you're on the same.
Okay, fair enough. Any other thought? Say you earn a lot in your business, okay, and you invest equal amount of what you earn in the business because the plant machinery keeps upgrading. 2G आया, 2G गया, 3G आया, 3G गया, 3G गया, 4G आया, 4G गया, 5G आया, 5G गया, 6G आया. Boss, is my business to sell something or to keep upgrading my technology? If technology impacts your capex in this manner, know for sure that it is going like this. Speed might be different, and that is what plays for them, but effectively such businesses are like that, and you got to think like that. Make sense? Okay. So okay, yeah, Himadri, you want to say something?
I was just trying to think that. So, are you saying about reinvestment in terms of from a business perspective? Like, if your business, you are continuously reinvesting without realizing the profits.
Any rate. Say, okay, I'll tell you what happens. Is textile manufacturing okay, I'm giving an answer to a question that I have, so I won't ask that. I will give some other example. Okay. Okay. Let's say telecom. Okay. In telecom business, have we reached the maximum number of subscribers possible, or have we reached to 80-90% of the level in India?
Yeah, possible, maybe.
Yes.
We have, right? Right. So, but so it means the company is able to charge a certain price. The companies are able to charge a certain price, and because of the recent developments that have happened, that also is curtailed. The costs also rise. The company is able to just cover its cost in terms of operations. But what about the improvement in technology from 2G to 3G to 4G to 5G to 6G? The Gs would ask for reinvestment of money, right? For the same customers, for the same revenue, right? More or less. Yes or no? Right? So, yes, I agree that, the escalator is moving a little slowly and the man is climbing a little faster, or man is climbing a little faster and the escalator is moving a little slowly. So there is some growth, actual growth. But is that a comfortable structure of industry that you want to be in?
Yeah,
or do you
definitely
think
not.
there are too many variables?
Instead, you want to just stand in a escalator which goes upward rather than
Exactly.
trying to run on an escalator which is going downward.
Absolutely.
We should avoid.
You should avoid it. Well left. The great Sunil Gavaskar said that. when you are playing in English conditions for the first 2 hours, don't try to act very smart. Just keep leaving the ball. As long as it doesn't come towards your wicket, always play for the in swing. Just keep leaving balls. There'll come a point in time when the ball will stop swinging and you can then beat the bowlers around, right? So that's the strategy. Just leave the ball. Okay, here's the quiz for you. And you need not answer today. You can think about it. If there is any question about the question, feel free to ask. I know it's too good to be true sort of a scenario, but yeah, just to exemplify, I've done that. Have we understood the question, all of us?
Yes.
Yes.
Okay. All the best with your thinking. Keep thinking for the whole week. Okay, guys. I'll just switch to my Excel mode now. Give me a minute. I'll stop sharing. Okay. So increase the size of this. Okay. Please tell me when you can see my screen. Okay.
Yes.
So first, what I've done is what you guys did. So I thought, let me be Gandhiji and do what I preach. That's why I did this. You don't feel that this guy is making us do 3 companies. He's not even doing one. So I did it. No, no, jokes apart. I had to, to get my numbers, I have to do it. So this is the common size income statement for Hatson Agro Products. Is it visible clearly to all of you? You want me to increase the size or something?
No, no.
No, yes.
Visible.
Visible.
ठीक, चलो. What do you see? What is visible? What do you see? Have a look. I'll just come back. Okay. Hi guys. So what did you see?
The company has been able to manage its margins. I think COGS we can see consistently. It is, if you see, something around 70% in the range from FY14 to 23. Gross
Okay.
profit margins.
Okay.
There is, I think, controlling. They have been controlling their cost throughout. We can say since last
Okay.
9 years. The operating
Fair.
cost has been 20. It has from 21% to it has reached to 24%. But I think
Mhm. What I've done is I've not taken other income at all. Okay. So don't get confused. I've just removed other income. I'm only looking at organic business. Okay. Fair enough, Pranay. What else do you see?
I see that the year of COVID is an outlier across. If
Okay.
you see, that's the best in terms of margins.
Okay. Fair enough.
So, yeah.
Okay. What else? Fair enough. Let's
The net
go on to
profit
the rest.
to be
Sorry.
on a very low from this numbers. I think overall, I think most of things are very similar. There's no changes other than what Shravan said, only on the number. But net profitability is very low. No, and is it this good numbers to have 3%?
Okay. Fair enough. That's a good question, Himadri. So we should ask now, is net profit is low? That's correct. But what we should ask is net profit our ultimate judgment metric? We'll answer that in some time. Okay. Hold that thought. Just
Yeah.
look at the
Okay.
total operating cost as a percentage of sale. What has happened?
Increased.
It has increased by 3-4%, right? And most
Hmm.
of it is because of what?
I think
selling and
Okay,
I think depreciation looks to be bit.
right. Depreciation looks to be. Okay. These are our initial thoughts. You also see another thing. They've been very disciplined with interest cost. Bloody 2% flat 2%, right?
Yes.
As if by God's hand it was being managed. Seems very disciplined, right? From this way, from this angle. Okay. Hold on to these thoughts. We'll come to that. Now look at the balance sheet distribution. Sorry. Yeah. So these are subheadings. I'll just highlight them in another color. You can look at balance sheet and make your inference, but I would be interested in looking at fund flow statement, nothing else. I don't want to look at, so a lot of people look at year on year changes and all that. Boss, that kind of confuses me. I want to look at numbers in spaces. Even if I'm looking at growth numbers, I want to look at 3-year, 5-year, 7-year, 10-year sort of numbers, because that gives me a better perspective. What will I do comparing what happened between this quarter and this quarter, this quarter and this quarter? Boss, anybody who is doing that, if they are doing it well, hats off to them. But to be honest, that's a lot of data, and more data is more likely more noise than more signal. I would rather be signal rich than data rich. So I don't do that. And I would suggest that you can follow it if you agree with that rationale. Okay. We Anything that stands out for you from the balance sheet? Okay, the equity is not visible, right? एक minute, huh? Anything that stands out for you?
Borrowing has reduced and reserves has increased.
Borrowing has decreased, reserves has increased. Okay. What else?
I think payables are going down consistently.
Payables as a percentage are going down. Inventory has increased. Net block has increased. Right?
Yeah.
Okay. Those are the thoughts that we have right now. Hold on to them.
And no receivables also. Receivables are 0.
Why, my friend? Why is receivable 0 in this business?
Because cash and carry.
Yes, absolutely. So that's an inherent blessing of the business. Okay. That's the inherent advantage of the perishable nature of that business. Okay. Now coming to fund flow. I'll look at 10-year, 5-year, 3-year. I'm more interested. Now comes Pranay's answer. Okay. Pranay, I am interested first in looking at 10-year, then 5-year, then 3-year. 3-year will tell me what is changing recently. 10-year will tell me what has changed over the years. Okay. So
Okay, okay.
let's reduce the size a bit. अरे यार ये percentage होता था ना, कहाँ गया वो? Yes. Sorry. Now
Is it 10 years or 9 years?
it's
Like you're
actually
comparing
9 years. मैं उसको 10 years लिख दिया हूँ. ठीक है? You are right, Shawan. मैंने उसको 10 year लिखा है. I've mentioned it 10 years because we are not calculating percentage here. इसलिए 10 year लिख दिया है. ठीक है? I mean, if you were to think in terms of percentages, वो 9 year होता. Let me try and get some 87 sort of, 85 sort of. Yeah. Better? Clearer?
Yeah.
Are the numbers visible, guys?
Yes.
Yes.
Okay. So where is most of the money coming from in 10-year period? Sources of fund. This is the sources of fund, right? And that's
Yeah, if you want, you can put view full screen, but you cannot modify.
just a minute. How view full screen? Yeah, perfect. Thank you.
Yeah,
Okay.
now you can even increase 90% or. Yeah, but I can even on the slide. I think everyone can zoom in. If you click on the icon, they can even zoom in.
Wait. I'll do it. Why do you want to put that? If let's do 100% and say full screen. Yeah. Clear, guys? Yeah. So where is the fund coming from?
Previously, it was coming from borrowings, reserves, and it has from borrowings has been reduced from 45 to 27, and it has been now we are dependent. We are not dependent on borrowings now. We are having using internal funds for our, from 45 to 27 it has reduced, and reserves has increased from 43 to 66.
Right. They've done minor dilution also in between twice. One, it was a right issue. The other one was also a right issue. So it's sort of a very minor right issue, but because the stock price is amazing, they generated a lot of funds through there. So factor that, adjust by 5-6%. Okay. Okay. You're right on the sources of fund. Application of funds. What do you see? Relentlessly applying funds towards NetBlock. Do we see that?
Yes.
Yes.
And
Yeah.
relentlessly reducing funds towards other assets.
Yes.
Other assets is receivable, inventory, payable. Even though inventory has gone up, which we saw earlier, the change in inventory, the incremental investment in inventory has reduced over the period windows from 17% to 11% to 1%, right?
Yes.
Incrementally not investing a lot in inventory. And payable has gone from 3 to 0 to 7%. Advances from customer is next to 0. And cash also is 1% or next to 0. What perspective do you get from all the numbers that you saw till now? One by one. Pranay, what do you get?
I think inventory has reduced. At the same time, capital work in progress has also reduced.
Capital work in progress, forget it, yaar. Pranay, it's not expected from you to tell me capital work in progress. It's a joker account. I mean, it, it's a hanging account. Why do you focus on that? Leave it. Focus on the net block, na?
Okay.
What else do you see? From everything that you saw, income statement, balance sheet, fund flow, what do you see?
Mm,
Okay,
mm.
we'll go to the next person. Who would like to speak next?
Shall I?
Yes, please go on.
See, at least what I observed is without taking much debt from outside, they are able to utilize their profits. I mean,
Okay.
basically, they're trying to get the profits and moving into reserves. That is one thing. And then more about they are investing for more, I think, more buildings or more whatever it may be, investing net block. Reinvestment, I would say, from the reserves, I guess,
Okay.
to get more profitability.
Okay. Fair enough. What do you see, Srikanth, combining fund flow, balance sheet, and common size income statement? Do you see a pattern emerging? Any pattern? Yeah. What is it?
I'm just thinking aloud. At least pattern means in a sense they are actually growing.
Okay. They are growing. They have, will you say they are sort of okay growing, hell bent on growing, very focused on growing, or how would you say it?
Above average.
Okay, above average. Fair enough. What are they focusing on? Current profitability or future profitability?
Future.
Seriously focusing on future profitability? Can we say that?
Correct.
Did you see the marked improvement in gross margin? there was a marked improvement over the years in gross margin. I will show you even better here. So what I have done is from 2012, I've taken numbers, and gross margin started with 25%, 24%. I told you, remember? And it has gone this year, the last year, March 23 was exceptional because due to COVID, the animal health had gone down and there were not enough animals who would produce enough milk. See, milk is not a commodity that can be produced from anywhere. It needs the cow. And if the cow is not healthy and enough number of cows are not there, then it won't be produced. So take that with a pinch of salt and look at numbers till March 2020. Do you see a rise in, and milk is a commodity, huh? The prices go up and down. So over time, do you see a sustainable increase in gross margin? Do you see an uptrend?
Yeah, there is an upward trend. Yes.
Right? Cool. Just a minute, huh? Okay. Yeah, you see an upward trend, right? Anything else anybody sees that we did not cover? Okay, we'll go to the next.
No, I think the inventory getting reduced is actually good, so that, I mean, they're not trying to maintain inventory, they're trying to sell things faster.
Exactly. Also,
Is-
when you look at balance sheet, you will realize that the inventory is actually increasing. You see the balance sheet? Inventory as a percentage of asset has increased from 10% to 15% from starting to ending. But when you look at
But
the
the
fund flow, it's not a lot, right?
Yeah, compared to the sales that they're making,
Right.
is manageable.
Compared to the sales that we are making, we'll look from our cash conversion cycle and all that. We are coming to that part. That's why I did not explain ratios before. Okay, cool. Shravan, you were saying something? Were you?
No, as in just that net margins are low, so so obviously it's a turnover business. I mean, they have to. I mean, I believe subsequently will show how the lower net margin gets kind of magnified because of higher turnover and leading to higher return on invested capital.
That's a bad one. Sorry. Just a minute. Let me use a proper color so that you guys can see. Okay. So yeah, that color is still visible and it should be for everyone. Sorry about it. Just a minute. I am bad with when I don't have enough number of colors. These are the colors I end up using. Okay. Himadri had asked, Pranay, your question was answered of fund flow that you wanted to ask at the beginning.
Yeah.
Pakka clear, na?
Yeah. So also for inventory, Shreya, as it's a perishable business.
Yes, it is a perishable business, na? Hatsun Agro Products.
Yeah. So it's good. I think they have been reducing from 11 to 1% as far as if compared to other business. We should have more inventory. Just like we said last company, it was Action Construction. They use inventory.
Right. Perfect. Also, milk is a product that can be converted into multiple products. Milk is like the Shaktiman that can become 10 Gangadhars. Do you all recollect Shaktiman? I was watching an episode, so I
Yes.
Okay. So my point is, milk is something that can get into multiple roles, which is buttermilk, ghee, curd, paneer, cheese, skimmed milk powder, anything, right? Whatever the whole gamut of things include, from khoya to everything. So when you want to store milk, you convert it into milk powder, SMP, and store it. And then you can use it in the lean season. It has a life of almost a year or so, a little over a year probably. Okay. So Are the numbers visible to you? Do you want me to increase the size?
No, instead, if you're not changing, you can put full screen. That's okay. Is that
Yeah.
will be enough to
That's
see clearly.
cool. Okay. So we'll just focus between, sorry, I have to dismiss some. We'll just focus between line number 15 to line number 26. Okay. First, we'll focus between 15 to line number 20. So you see invested capital ka formula, who will tell me? Non-accounting guy. What is invested capital quickly?
How much invested capital? Say
What's the formula for invested capital?
invested capital. What we discussed is sales by invested capital is the turnover invested
Yes,
capital
that's true.
turnover.
But we calculated invested capital in some way, right? What is invested
I
capital?
think it is sum of uh, uh, the assets that you put, no?
Yes, yes, yes. Go on, go. You're going in the right direction.
I think invested capital is all the, I don't know, like equity we should consider, but all the assets that you put in for the operations.
Correct.
And
So invested
yeah,
capital
for the
is
business.
nothing but. Srikanth, would you like to try invested capital formula?
Maybe I just I try. Maybe I might not be correct. Yeah, short-term current assets plus long-term assets, something like that.
Okay, you're close. Okay, so it is long-term assets or net block plus current asset minus current liability or net working capital. It's not complete current asset plus minus current liability. It is actually receivable plus payable minus receivable plus inventory minus payable minus customer advances minus security deposit. Okay,
Okay.
that's net working capital. Net working capital plus fixed asset gives you invested capital. We all know what net margin is. So we saw net margin for the business, right? So you have net margin on line number 16. You have invested capital turnover calculated for all the years in line number 17. You've got a return on invested capital, which is the multiplication of net margin and invested capital turnover in line number 18. And you've got invested capital by equity in line number 19, which when multiplied to return on invested capital produces return on equity, which is in line number 20. Do you see, Himadri, why we did that segregation? Now analyze each of them in tandem. What pattern emerges for you? Just from row number 15 to row number 20. First do it for row number 15 to row number 18. Let's do it from row number 15 to row number 18. What do you see?
Invested capital turnover is decreasing.
Correct.
And invested capital is just everything are very much up and down a bit. But the capital turnover is decreasing.
Correct. Fair enough. So capital turnover is decreasing. Even if we leave FY23 aside, till FY22 also, we have seen a decline in return on invested capital from 15% to 6%, 7%, 10%, 6%, 8%, 5%, 12%, and 9%, right? Which is volatile. Okay. Now, when you multiply to leverage, which is invested capital by equity, which was at 2.9, went up to 3.6, 3.8, 3.3, 3.9, and started coming down again. In 2022, it was 2.6. You see the return on equity also declining from 43% to 23%.
Hmm.
From this whole thing, what do you understand? Is it that they are earning less profit per unit, or has their sales growth decreased?
I think the sales growth has decreased.
Yes, the sales growth.
Invested capital now from 4.8, it has reduced to, it has been half.
Right. Correct. So
Mhm.
invested capital turnover has reduced. Also, if you were to just conclude from this, you would say this is a pathetic business. Correct?
Yeah.
This is not a great business because things are decreasing. But
Especially, I think if 20 is decreasing, which is definitely giving some negative sign. Or
right,
yeah.
perfect. But now let's go look at what we have in gross margin. Gross margin has gone from 26% to 31%. I'm leaving FY23. Okay. And operating cost to sale, even though has increased only by 3% in the last year, it is 3% is a lot for a low margin business. Do we agree?
Yes.
Right. And more operating cost has increased because they have invested more in fixed asset and depreciation has increased. Correct?
Yes.
We saw depreciation increased, correct? And hence
Yes.
operating margin has barely increased while they have kept their borrowing policy consistent. So you see the company investing in long-term assets, even though their sales growth has not happened.
Hmm.
Can I conclude that?
Yes.
Himadri, can I conclude that?
Yeah.
Shrikant, can I conclude it?
Yes, yes. But I have one question sorry to ask. Why?
Just 1 minute.
Okay.
Just 1 minute. Before I just to confirm, my sales growth in the 9-year period was 13%, 5-year period is 11%, 3-year period is 11%. Whereas my invested capital growth is 21%, 16%, and 15%, which is higher than sales growth. Right? Invested capital has been growing, and in that, fixed asset net block has grown at 20, 17, and 14% respectively. Okay, just to confirm whatever we inferred. So our inference was correct, guys.
Yes.
Does it make sense? Himadri?
Yeah.
Okay. Yes, Shrikant, you were saying something. Sorry.
No, but how do we conclude sales growth is reducing? Could you explain?
That's a good question. So, which ratio has declined here? Which number in 16, 17, in row number 16 or 17, which number has come down? Forget column
Return
number
on
N.
invested capital.
Invested capital turnover, right?
Yeah. No,
So
no, not
invested
only that.
capital
Return
turnover
on
is
invested capital also done, right?
return on invested capital is a resultant of multiplication
Yeah,
of
yeah.
invested
Okay, okay.
capital turnover and margin. So if invested capital turnover has reduced, and we saw that they have increased their assets from fund flow, from balance sheet, from depreciation increase, then it is obvious that the sales has decreased. Make sense?
Yeah, got it.
Cool. Okay. So a return on invested capital tells you that the business operations, the manager of the business is not doing his job properly. Okay. You can conclude from here. Or you could say that the sales growth has not come enough. If they and have they kind of stopped building assets, or have they put below average effort once they saw the results, that they're not getting enough growth? No, right? They've persisted with it.
Yes.
So it shows that the management has confidence that the growth will come sometime. Maybe not at the same pace because they are producing high margin products now. The turnover ratio won't be 4.8. It could be somewhere around 3.5 or 4. Once they are done with their asset expansion, their empire expansion, you will start seeing improvement in sales. Okay. Why doesn't sales growth come in a milk company? Can a milk company produce milk from anywhere, from thin air, or it needs more cows?
It's more
Is
cow.
there a natural constraint?
No.
No. Is there a natural constraint on the availability of milk?
Yes.
Right? There is a natural constraint. So once it has its capacities utilized, it can produce better results, is one possible conclusion. The other possible conclusion is, no, boss, this company is not good. If I didn't know anything about the business, if I didn't know it was a milk business, this company is a pathetic company. Agree on that? Looking at the numbers. But now that you think about the milk aspect of things, what is your inference now? Milk is not always available. You cannot increase milk supply by just doing this. You can have more customers, but you should also have more supply of milk. And the margin profile tells me that they have been premiumizing and going to higher value added products. So they are already using the existing milk supply to create higher margin products, which means they are leaving a lot of liquid milk or low value milk based product customers underserved. Possible or probable or plausible? What do you guys think? Yes, Pranay, you were saying something.
About milk, yes, there are regional players in milk, first of all.
Mhm.
Just like if you see Amul covers Gujarat.
Mhm.
So their reach is up to that particular state. They cannot go. It's difficult for them to enter some other region. That's one point. Basically, if they want to increase the sales or something, they need to increase. They do, they do to create some new products or introduce some new products.
Right. So if the gross margin is improving, it means they are able to scale new products, or else the gross margin would not improve so much, right?
Right.
So yes, geographical constraint is there. I agree on that. And that is one reason that is causing them to not reach where they should reach. Right.
Right.
But have they been expanding geographically? You can go find out. That is part of narrative part, not the number part. So you should go read about it and then we'll discuss on that part. Okay. Is there anything else that anybody would like to infer from whatever information we have?
Maybe from my side, only one point. Because of the natural constraint, the scalability of business is less.
Yes. Yes. Absolutely correct. Absolutely correct. Anybody else? Brilliant on that one. So that is how you infer things.
So my point is like the net block growth that they have. How can we ensure that this net block is I would say like the right net block for them to actually have the potential? Like that numbers won't tell. Numbers will tell that they've invested in some things which is called as company asset, but we don't know whether that that asset is going to be valuable, or is it valuable in the coming future or
That's
even present?
that's a very pertinent question, and that is to do with capacity growth, which you are asking, which Indian companies unfortunately do not disclose very openly. So you see volume growth column remaining vacant in line number 34. That is because they do not disclose that very openly. But as per the last management interview, they have a capacity of 60 lakh liters now, and they are right now running at about 35, 38, 40 lakh liters.
Hmm. They have not reached maximum capacity, I mean.
No.
Yeah.
Maximum capacity is far away. Two-thirds of capacity is yet to be utilized.
Hmm. So I mean, this information, like, is we have to just take by the meeting, or something, like, there's no way to verify that, right? If it is not disclosed, like maybe it is 50 or maybe 45, they're telling that it could be 60.
Okay. So I've been tracking this company for a good 10, 12 years now, 10, 11 years now. And you can reasonably trust what the management says. So the management does not talk or does not bluff around, is what my opinion is. Okay.
Yeah.
You need not go by my opinion.
Yeah.
But in my experience, it hasn't happened that they have bluffed. Yes, but for that you will have to go through con calls. You will have to listen to management interviews, see the finer nuances. The narrative part will require you to do the hard work. Okay, it's not just number crunching. If number crunching was the only thing, we would have mathematicians doing it, and there are way better mathematicians than all six of us put together, right? And they would do it, but it's not about mathematicians. Okay, fair enough. Now similarly look at return on capital employed side, which is line number 21 to 28, 26. I'll just change the color of this line so that it becomes somewhat smoother.
So can I just say one thing before?
Yeah, please.
So because I was always on the other side, like, in our first discussion, you mentioned about don't listen to people. Don't. I mean, I started before. I used to be more of like, listen to people. They say, okay, this is what it will be. Then you try to actually believe or trust. And then we said, instead of believing on the story or narrative, we look at the numbers. Now, so what you're saying is, if somebody says something, so if that has backing of with their numbers, then you can possibly correlate between the narration and the numbers. So what you're saying is, because we see the capital growth here, and because they are telling that this much of capacity is there, and because if they say that there is a capacity, and when we go and do an analysis, and if we don't see the net block growth, which means they're bluffing.
Yes.
Right. So that's how we infer between this and this.
Right. And that, my friend, in management quality session will be one of our questions, which is called a metric, but it is actually a subjective one. It's called walk the talk. If somebody is walking that talk, it means they are not bluffing. You don't trust people on what they say. You trust people on what they have been saying and what has been happening. If both are in tandem, like quality of earning, okay, I'll trust you. As long as walk the talk is fine. I trust your earnings as long as the quality of earning is fine. Similar concept, right? That's what we are doing.
Okay.
But if you do not have that background and you are skeptical about it, you have every right to be skeptical.
Yeah, I mean, if you don't look at the numbers, if somebody says that this is the capacity, you're telling like you don't believe it. I mean,
Absolutely.
it's
You should not believe it.
Yeah, if you have numbers backing, and if there's something telling, and if they are all correlated, you can narrate the story, then it's fine.
Exactly. That's why numbers to narrative, narrative to numbers.
Okay.
Okay. Yes, Ravan, you were saying something.
No, I just wanted to say that, I don't think, that the bluffing, if at all it is there, it will be so much on the face. Even
Oh,
they know that they themselves know that they are not investing, in their net block growth, and still, they'll not have the guts to come on, con call and say, oh no, we have the capacity. It will not be that much on the face. So it will be very subtler, and that's what, like, I think, it would be great to see such examples, and learn from those examples, that where it is very subtle, that the management is bluffing, and we could, we are able to somehow catch the management, that it's, call the bluff, maybe. So
perfect.
yeah.
I'll give you an example of that, and it'll be from an industry that we all go to on in the first week of January. We all make resolutions and go to the gym, right? Do we remember Talwalkar's
Yeah.
Talwalkar gym? Yeah. So Talwalkar
Yeah.
was a big brand, okay, not as big as Gold's Gym and all, but it was big enough. So they had amazing revenue growth. When you go to the notes and read, you will find out that their revenue recognition policy read, any money recognized received during the year will be booked as revenue for the year. It means if somebody comes on 31st March and gives me money for 1 year, which is till the next 31st March, I've earned it in this year. And the company goes around saying, boss, I am having amazing revenue growth. Do you see that they are trying to front load the revenue, and uh, just 1 day before, just because they received the revenue 1 day before, they're not accounting it in the next year, but in this year. So that's how it looks like.
Yeah.
And there are many such examples. We'll keep talking about it. Okay. So that's one for you from another aspect. Now just look at line number 21 to 26. Capital employed का formula कौन बताएगा मुझे? What's the formula of capital employed?
Total equity plus borrowings.
Shabash. Yes. Okay. Just to balance it out, I've taken net margin, like invested capital turnover, this capital employed turnover, sales by capital employed, and the multiplication of that is return in capital employed. Actually, as per formula, return on capital employed is profit before tax as the numerator. But no harm in being extra conservative and removing some cost. So I've done that. Okay. What does return on capital employed tell anybody? So if return on invested capital is the manager's perspective, and return on equity is the owner's perspective, return on capital employed is whose perspective? Any thoughts? It is the capital provider's perspective. Okay.
Yes.
If the business per se does not generate enough returns, the business itself is not good, right? No matter which side it is taking capital from, be it equity or debt. Actually, the debt holder's perspective is return on capital employed. It tells you whether the business inherently has the caliber to generate uh, good enough returns or not. Okay. Just to put it in the DuPont, I have capital employed by equity, which again has followed the same trend as the previous one, invested capital by equity, and the return on equity is the same. So it's just to give you a perspective. Himadri, do you understand now why we have different ratios, and even when they cancel out, why we see the pattern or the flow or the trend?
Yeah. So because you put in the rows to see each of the row how they're changing.
Right. Fair enough. Now let's look at other things. You guys have 15, 10 to 15 more minutes.
Yes.
Yes, yes.
Yeah, sure.
Okay, fair enough. So gross margin, we all know, common size. Gross margin is after removing whatever is to be expensed for raw material or cost of goods sold. And then operating cost is anything between gross margin and operating margin is operating cost. From sales general admin to rent to SG&A, sales, I mean, sorry, to depreciation to other expenses to R&D, everything is covered. That comes as operating cost by sales. It includes depreciation, mind you, huh? And operating margin is gross profit minus operating cost to sale. Net margin, we know, profit after tax is also called as net profit. Quality of earning, we have learned, right? Receivable days is, what does the receivable days tell us? Receivable days formula is 365 by receivable turnover, which is sales by total receivables. Okay. Can someone tell me what receivable days tells us? Himadri, you tell us because you run that business and you don't have receivable days in your business.
Yeah. So it basically tells how long after your sale, how long does it take to get the money?
And it is in number of days.
Yeah. Yeah.
Similarly, inventory days is 365 by COGS by inventory. I'm not taking any average and all, which usually people suggest. I'm just taking simple formulas, just so that everybody understands. Okay. I know Shravan and Pranay would tell me that, पिछले साल का इस साल का average होना चाहिए, but average नहीं ले रहा हूं मैं. ठीक है. So what it tells me is how many days of inventory do I have with me. Payable days is 365 by COGS by payables. It should be actually purchases by payables, but I'm taking COGS as proxy. Am I doing right, Shravan and Pranay?
Yes.
Is that acceptable?
Yes.
I learned from you, so so whatever
Okay.
you said.
Is acceptable. Okay, fair enough. Thank you for the honor. Anyways, so payable days tells me how much money of my supplier am I holding back. Receivable days plus inventory days minus payable days. We can have customer advances days also. What I've done is, because customer advances was very low, I've added it to payables and used it in the same number. So what I get after adding receivable plus inventory minus payable days is cash conversion cycle. It tells me from the day I put 100 rupees out to the day I get that 100 rupees back, how much time it takes. Okay. Free cash flow to firm is a simple formula, which is cash flow from operation. Till here, are we clear, guys?
Yes.
Yes.
Himadri and Shrikant, are we clear?
Yes.
Free cash flow to firm is basically what is the cash that the firm would be left after removing for all the expenses that are to be done, which is, so we start with net cash flow from operation. Since interest is not subtracted, we subtract interest because it has to be paid out, and then we subtract capex, all the capex, and we come with a number which is minus 68, because the company has been investing more than it is earning. That's why most of the times you see the number to be negative. Borrowing by free cash flow is one metric. When free cash flow is negative, you can take net profit also. Okay, that is a good proxy. We all know how net working capital is calculated and all, so that's fine. What I've done is I've looked at growth not every year, but in blocks of 9 years, 5 years, and 3 years. I don't want to see. If you want to gain a good perspective, look at numbers in blocks. Don't look at, okay, what is happening every year. Sometimes it will rise by 20%, then it will fall by -8%, then it will rise by 40%, then it will fall by -16%. Boss, what is the use of looking at that? Do we agree to this?
Yes.
That's why to gain a perspective, always look at numbers in blocks, especially people who are traditional financial analysts. I'm talking about Pranay and Shravan. Please get into the habit of looking at these numbers. You will get a better perspective and you will draw better judgment.
Yes.
Can we do that, Pranay? Shravan?
Yes. Yes.
Please get into the practice. Okay, thank you. Okay, now comes the red part which I've highlighted. Okay, so food for thought, owner's earning. Okay, here owner's earning, I have, this is not the formula, this is how it is supposed to be thought about. It's not the formula. Please understand, it's not the formula. Okay, and it is not actually profit before tax, it should be profit after tax. It's not the formula, it is how it should be thought. So what we do is we add back depreciation to profit after tax, adjust for maintenance capex, adjust for maintenance working capital, and adjust for maintenance OPEX. Maintenance OPEX, operational expenditure. What is maintenance capex? What is maintenance working capital? And what is maintenance OPEX? Can anyone tell me? I didn't think we could cover this till here, but great, guys. You really cooperated and you understood things. Thanks for all, putting in all the effort and the homework part. Not the homework. I don't like homeworks, but yeah, in your efforts part. It's because of that that you understood everything. But what do we understand by maintenance? And why should we take only maintenance?
If you have some
Sorry?
machinery, so maintenance of machineries also we have some.
That's the accountant's definition, Pranay. We are talking about the analyst definition of maintenance capex, maintenance working capital, and maintenance OPEX. Himadri, me, and Srikanth, since I took separate sessions for them, I explained them. But I would like to hear from others, Hiral, Shravan, and Pranay. That's because they don't have an accounting background. I've taken it okay for them. Yeah. What do you think is maintenance? Okay. I'll leave you with this thought. Okay. I'll tell you something. Please listen carefully. All of you. So I'll just get this cursor down so that it is visible. So my idea here is that so what is owner's earning? Owner's earning is the actual cash that would be left in the hands of the owner if the business were running just to stay where it was. If the business was running to stay where it was, whatever cash would be left in that scenario would be called owner's earning. That's the actual current earning that the owner would have in hand. And you should evaluate the company on that number, not free cash flow, that number. Why? Because free cash flow doesn't account for maintenance capex or maintenance working capital. It just simply deducts capex and you get a negative number. Right? Right, Pranay? Right, Sean?
Yes.
Yes.
Right. Okay. So now what would take the company to remain where it was? If we were to ask this question, do I mean that the company does not need to grow or grow at the rate of inflation, grow at the rate of GDP, or grow at the rate of the industry growth? What would be considered static? growth at the rate of no growth, or growth at the rate of inflation, growth at the rate of GDP, or growth at the rate of industry growth? What would be
Obviously, at
considered relatively static? Sorry.
growth at growth at inflation is static.
Okay, that's static from uh, layman's perspective. Absolutely correct. Okay. Now, would your position in the industry remain the same?
It will be better, I think, if you're if you're growing at the inflation level. Oh no, from the industry wise, I think you have to grow as per the industry level at least.
Exactly. So there is a concept called environmentally stable state, okay, which means a dynamic equilibrium. What it means is, if you want to remain static, say if there is an escalator that's going down and you are running up, to stay where you are, you will need to run at a certain pace, right?
Hmm.
Guys, do we understand this?
Yes.
Yes.
If there is an escalator that's going down, to stay where you are, you will have to climb at a certain speed, correct?
Yes.
What would be the speed where you would not move anywhere? What's the speed at which you would remain at the same step in the escalator, or the same position in the escalator?
You run at the same speed as escalator
Yes,
going.
absolutely. So you got to run at the same speed as to the escalator, correct? So if you want to remain where you are in an industry, you will have to maintain your market share. You will have to grow at the industry growth rate. So you will need to calculate the industry growth rate based growth for the company to come up for maintenance working capital, maintenance capex, and maintenance operational expenditure. Does that make sense?
Yes. Yes.
How can we calculate that is your food for thought. Enjoy. Have a nice chicken biryani or whatever biryani you want to have, and scratch your head, think about it. In the two articles that I'm sharing right now, I'll share one article. The bottom of it contains the link to the subsequent article. There it has been mentioned that I would write another article explaining maintenance working capital, but I never wrote it. Okay. And I probably will not write it. I'll keep it for only people who do a session with me, and I would tell it there. Actually, it is available in the open, and Buffett has already given it. It's just that people would not go screen through all the pages and get it out. And so if somebody is genuinely interested, let him make the effort, right? Why put it on a blog or something? Okay, I'll just share that.
You will also share the slides, right? Today
Yeah,
there
yeah,
was
I'll share. You have two food for thoughts this time. What are they?
one is the textile. You had some question on it.
Yes. So that is also related to this one. I'm giving you some cheat codes.
Hmm.
Just a minute. I'll stop sharing it. Where is it? Let me stop recording first.